For our reference and also for our point of discussion in this webinar, we will assume our statutory retirement age as 63. Okay, now for those who actually open up way earlier, so the whole scenario is the same. You just remember that your own statutory age is 62. All right, other than that, everything else remains the same. So there are two scenarios. One is that if I were to make my withdrawal before the statutory retirement age, which is 63. Okay, and what happens if I were to do my withdrawal after 63? So let us look into the first scenario. That is, I make my withdrawal before 63. So what happens? Now 100% is going to be taxable, because why? End of the day, you must remember this is a tax deferred scheme. All right, you're not going to get your tax deferred. You're not going to get your tax waived, but you're going to be deferred. So the logic is what? If you are going to advance your withdrawal, then of course your tax is going to be advanced again, right? Now, other than that, there's also another 5% penalty. All right. Now, how this thing works is that, assuming in the year of 2022, okay, I withdraw 100,000. My earned income is 100,000, and during that period, I withdraw 10,000. So remember, first 100% is taxable. So this 10,000 that is being withdrawn will be add on to my earned income for that particular year. So my year of income become 110. Now, other than that, I will also be subjected to the 5% penalty for the 10,000 that has been withdrawn. Okay. Now, some of you may be saying that, yeah, very simple, right? If the government or IRAS is going to penalize me for this 5%, then I'll just tell them that I got no money. Okay. Now, my answer to you is Singapore is very efficient. Okay. Now, efficiency works both ways. So first, we talk about the advantage of efficiency, right? Now, the advantage is that when I contribute my 10,000 to the banks, I don't need to do any declaration. I don't need to tell IRAS that, hey, I contributed 10,000 to my SRS. What the banks will do is that they will inform IRAS on my behalf. So they'll write a letter to IRAS and say, hey, Kim Hayes has contributed 10,000 to his SRS. Okay. And when I receive my tax statement, my 10,000 relief will automatically be there. Yeah. So that's where we love our efficiency, right? Now, efficiency, what is the negative side? When I'm going to be penalized this 5%, similarly, the banks are also very effective, right? What they will do, they'll take the $500 first, then they'll refund you the 9,005. So sorry, there's no chance for us to say, I got no 5% to pay you. Okay, so be careful with that. Okay, so now, but under some situation, you may be withdrawing before the statutory retirement age, but you are not subjected to the 5% penalty. So let us look into what are some of the situations here. Example, if today I were to do a bankruptcy, I declare myself as a bankrupt, I will not subject to the 5% penalty. However, take note, 100% is still taxable. Okay, so be clear, there's two situations, tax and penalty. Okay, so bankruptcy, there's no penalty, but 100% is still taxable. Okay, now next, if I were to make a withdrawal on medical grounds, okay, terminal illness or death, similarly, there is no 5% penalty. At the same time, 50%, only 50% is taxable. All right, so this is the difference. Just to give a quick check again, if I make a early withdrawal before statutory retirement age, due to bankruptcy, 100% is taxable, but no penalty. After that, if you are talking about withdrawal due to medical grounds for terminal illness and death, 50% is taxable only. I'm also not subjected to the 5% penalty. All right. Now, there are also other clauses for if you are making withdrawals due to terminal illness and death, okay, which later part I will also run through with you. Okay. Now, these are for Singaporeans and so on. What about foreigners? Okay, if you are foreigners, logically, we know that you won't be in Singapore for long. Okay, so we also allow, or rather, IRAS also allow them to make an early withdrawal before statutory retirement age. Now, first, you got to take note, when you refer to foreigners, you must not be a PR. Because if you're a PR, you refer to yourself, you're as good as a Singaporean, okay, your status. Okay, so you whatever tax and 5% penalty, you follow the status of a Singaporean. Okay, so for foreigners under this situation, and if you make an early withdrawal, you will not be subjected to the 5%. What are they? First, your SRS account must open for at least 10 years from your first contribution. Next, you must not be a Singaporean or PR for a continuous period of 10 years prior to the withdrawal. So what are these scenario? Example, now, I've been a Singaporean for the longest period in my life, right? Now, if, for example, the last 5 years, since maybe just before COVID, for example, I give up my PRship, no, I become a Australian citizen and so on. In this situation, because my period falls within the 10 years, I'm not only a non-citizen for 5 years, right? Then I will not be subjected to, I will not be entitled to these clauses. All right, so this is what it means. Now, the next one is that it must be a full withdrawal, which means whatever amount is in the money in your SRS, you got to basically take out everything, close the account. All right, so under this scenario, the 5% will not be imposed.